Hi, I'm David Rudder, the CEO of Hi, I'm David Rudder, the CEO of R3, and you're watching Taking Stock.
I'm JD Durkin, live from the floor of the New York Stock Exchange. You are watching Taking Stock. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Okay. Why just pretty good? I'm JD Durkin here, live from the floor of the iconic New York Stock Exchange. You are watching Taking Stock. Board and Dow Jones Industrial Index in New York, whatever. Yeah, see, he's good. I ran out of steam. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 10. Yeah, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. I'm JD Durkin, live from the floor of the New York Stock Exchange. We have Victor here. Did you say that was good? Yeah, sorry, it was good, bad? How he's standing in front of the camera. Okay. Should I turn this off?
Yeah, might as well save.
We're here at Solana Breakpoint 2025 in Abu Dhabi, and I am joined by none other than the GM of Payments for the Solana Foundation, Shiraz Sher. Shiraz, welcome to the show.
Thanks for having me.
So, GM of Payments, Solana Foundation. It is a very big market. People have been saying for a long time the institutions are coming, but tell me a little bit more about what the institutions in the payment space looks like.
Yeah, well, I would say in the last 6 months, after stablecoin legislation passed in the U.S., it's been a tsunami of activity. I would say after stablecoin legislation passed in the U.S., it's been a tsunami of activity. I would say prior to that, there was a lot of innovation teams like experimenting around the edges. Suddenly, with legislation passing, everybody is jumping in and actually building on blockchain rails. The primary sort of use cases today are cross-border money movement with stablecoins. So a lot of remittance companies are jumping on board because it's much easier to move money.
With the regulation, are you seeing the use cases also evolve at the same sort of speed in terms of what we might see in the future?
Yeah, I would say at the forefront right now is probably cross-border remittances. So P2P consumer remittances.
Socure is an AI platform that Socure is an AI platform that helps enterprises combat Socure is an AI platform that helps enterprises combat deepfakes, manage risk with its Risk OS platform, and so much more. Joining me now is Socure's newly minted President and Chief Commercial Officer, Matt Thompson. Matt, welcome to the New York Stock Exchange.
Thank you. So exciting to be here with you.
And I understand it's your first day on the job.
It is, yeah. First day on the job as president at Socure, but I've been in the identity industry for 15 years. I co-founded a company called ID.me. I led consumer identity at Capital One. I ran a business called Idemia, their identity business for North America. So I'm a veteran in the digital identity.
Socure is an
I'm a veteran in the digital identity space, but been with Socure the last 4 years, building their government business, then Chief Revenue Officer, and today officially President of the company.
What is the digital identity space?
So that's really how you prove who you are online in order to establish trust with another entity. And that could be another person for, in the gig economy, that could be a bank that you're trying to open a new relationship with, a fintech. Basically anywhere you need to prove your identity online and anywhere that corresponding entity needs to be able to trust that you are who you claim to be.
And how?
Welcome. Thanks for having me. And it's great to meet you in to be joined by Solomon Tesfaye from Aptos, who's the Chief Business Officer. That's correct. Welcome. Thanks for having me. And it's great to meet you in person.
That's right. I feel like it was inevitable at this point how many conversations we've had over the years.
Exactly. So tell us, what are the big things going on at Aptos right now?
So Aptos is right now hyper-focused on three things within global trading engine: money movement, data on chain, and basically when it comes to just capital markets holistically.
Now, when we look at all of the narrative that's going on here at ADFW between crypto.
I'm here with James Zhang, Strategic Advisor for Sharps Technology. Thanks so much for stopping by. Victoria is now, since we are in Abu Dhabi, for Sharps Technology. Thanks so much for stopping by.
Thanks for having me. It's exciting out here.
It sure is. Now, since we are in Abu Dhabi, let's just kick off with developments you're seeing in the digital asset space in the Middle East.
Honestly, I think Middle East probably plays one of the most pivotal roles. As you know, Middle East, Asia, and the US. Even though the NASDAQ is located in the US, there's capital markets all around the world and pockets of capital. I think, honestly, regulations have gone a lot better. If you look at some of the companies out here, Rockaway X, Soulmate, one of the largest sponsors, they just got acquired, and the DATs are honestly really driving out here.
Speaking of DATs, we've seen market sentiment shift a little bit the past few months. So, how are digital asset treasuries positioned now in this new
Hi, I'm David Rudder, the CEO of R3, and you're watching Taking Stock.
I've gotten that. Yep. Oh, yeah. I've gotten everything you could think of, dude. Oh, look at you. Got it. Anyone else? Yeah, let's keep going around. Go ahead. We'll put them in the show off the top. Yeah, I think we're in good shape here. Mark Toss, Rachel Tether, Shiraz Sherry.
Shiraz Shear.
Shear, it's one syllable.
Right? Shiraz Shear. What? It's Shiraz Shear.
Shear, one syllable.
I mean, we could just look at it.
Rachel Tether speaks with, pardon me, hello. Sure, good, thank you.
Hi, I'm David Rudder, the CEO of R3, and you're watching Taking Stock.
Let's do it, one and all. 2 minutes to go into the close. Don't call it a comeback, but how about this for this Friday Eve? It is Thursday, December 11th, a fresh set of all-time highs across the major market indexes. What a beautiful view of the big board I got down here, because all of the major market indexes I'm looking at, they're all expected to close not just in positive territory, but in record-setting territory. All of this exciting price action coming just one day after the central bank cutting short-term interest rates, a little bit of dot plot projections for 2026, some dissenters on the Fed as well, even though they are only projecting one short-term interest rate cut for the new year. Investors clearly hearing what they want to hear on the day, pushing the markets to fresh all-time highs. Our good friend Mark Newton, head of technical strategy at Fundstrap. Mark is on deck. He'll join us right after the closing bell to get his take on today's price action, movements from the Fed, and what he's expecting for the tail of the tape into 2026. Materials, financials, and industrials, those are your big gainers on the day for the S&P 500, but some losses to the downside. Those losses led by energy, tech, and telecom on this Thursday, December 11th. Welcome to the show. You're watching Taking Stock. I'm your host today, J.D. Durkin, mere moments away from the ringing of the truly iconic closing bell. Today, the team from Black Hills Corporation is set to do the honors. Big news on the morning here at the New York Stock Exchange. Of course, the team from Time Magazine naming their Persons of the Year, Architects of AI, after incredible deployment of AI technology here in 2025. We'll talk a lot more about that and bring you everything you need to know out of Abu Dhabi Finance Week. But for now, the closing bell. And there you have it with the three strikes of the gavel on the iconic sounding board here at the New York Stock Exchange. A fresh set of all-time highs. Final tail of the tape. Final-ish. It always takes a moment or so to settle. The S&P 500 will finish up 0.2%. The Dow up 1.3. Strong gainers from financials in particular there. The New York Stock Exchange Composite Index also finishing in record territory on the day. And how about the small caps? The Russell 2000 in on the fun, up 1.2% on this first day after the Fed decision. Let's say hello to Mark Newton. He's one of my favorite go-to guests. I love talking with CMT officials, technical analysts. What is top of mind for you? First of all, welcome back to the show.
Great to be here, JD. Happy holidays to you.
I want to get your sense on momentum and breadth today. Moderate buying participation across the tape. More than 230 NYSE listed names reaching fresh 52-week highs. What are you seeing in terms of breadth and broader participation, not just the tech stocks?
Yeah, look, the most important thing is that just today we saw the Dow Jones close at a new all-time high, which hadn't happened in some time. So we saw the mid-cap 400 index also close at new highs. So this week we've seen small caps, IWM, we've seen eco-weighted S&P. Now we're seeing MDY for mid-caps and also the Dow. So despite the fact that, look, we have stocks like NVIDIA and Meta, which haven't gone anywhere in the last few months, that doesn't matter to the market. We're seeing a broad-based recovery, which is actually quite constructive towards thinking that the market can push back up to new all-time highs with regards to the S&P and the Qs. I mean, look, it's obviously a little bit healthier now than what we saw a few weeks ago, despite the fact that NVIDIA has underperformed. That's not a big deal in the near term. The fact that we're getting stronger, breadth is improving, momentum is improving, that's actually a very good sign technically for the stock market after this dovish cut that we saw yesterday out of the Fed.
Can I get your take on defensives? Because I've been doing the show every day down here since August, and what I've noticed some of the defensive trades happen as tech and discretionary start to sell off.
Right.
And in its place at the top of the leaderboard, you get sectors like utilities, a lot of healthcare outperformance as of late, not so much the tail of the tape the last few days, but what do you see in terms of strength or weakness for defensive trades?
This is actually a pretty important tell for investors that in the last 2 weeks we've seen exactly the opposite. We've seen healthcare, utilities, and also, the REITs have all pulled back to really multi-day lows, and there's been no sign of strength out of consumer staples. That was the one thing where if you're going to be bearish, you need to see staples work. That really hasn't been happening. So if anything, look, this is a risk-on market right now. We're seeing the defensives weaken. We're seeing financials, industrials push back to new all-time highs. RSPN, which is the ETF for the eco-weighted industrials, is back at new all-time highs today. That's great. We're seeing these transport stocks really kick into gear. It's not only the airlines, but a lot of the different rail freight stocks are showing extraordinary strength. That's a good sign because these have been lagging for years. So if anything, look, the Dow theorists always want we want to see the transportation index move up and join what's happening in the Dow Jones Industrials. That's now starting to happen. So, you know, we won't talk about next year, but in general, this is a very good sign heading into the last few weeks of the year.
This is why we love talking with CMT professionals, because he's going to give us some old school Dow theory. What's going on with the transports? What's up with the industrials? Now it's a party. Give me your take on the small cap breakout, how sustainable this is. When we have these days of outperformance, it's usually the Russell leading that action. Today up 1.2%, another all-time high. What do you find?
My view is this is all about the dovish cut that we saw yesterday. So, you know, Powell had a chance to be hawkish. Instead, you know, he's not sure about future. In general, it was seen as a sign of being, you know, Treasuries rallied for the last couple days. Now we're seeing small caps move right back to new all-time highs. So that's generally a pretty constructive sign for small caps. In general, small caps tend to outperform when the Fed's cutting rates. We have these high debt to capitalization companies, they benefit when interest rates come down. So we expect 2 more cuts in the next year. That's going to be good for small caps. In general, another thing, small caps are outperforming the SPY. So we're seeing a lot of these laggard high cap technology stocks. Small caps have been doing better than actually Mag 7 in the last few days. That's something for investors to note heading into next year.
Mark Newton is the head of technical strategy at Fundstrat. Every time I talk to you, I learn so much. You make me such a smarter host to do stuff, and I know we have a lot of smarter investors.
2 smart guys. Look, it's all about
It's great to have you. Mark, thanks for kicking us off. If I don't see you, enjoy the rest of your holidays. We'll do it again soon.
Thank you, sir.
Folks, don't go anywhere. FinTech contributor Rachel Tether sat down with Shiraj Shur of Solana Foundation at Solana Breakpoint in Abu Dhabi. Take a look.
We're here at Solana Breakpoint 2025 in Abu Dhabi, and I am joined by none other than the GM of Payments for the Solana Foundation, Shiraz Share. Shiraz, welcome to the show.
Thanks for having me.
So, GM of Payments, Solana Foundation. It is a very big market. People have been saying for a long time the institutions are coming, but tell me a little bit more about what the institutions in the payment space looks like.
Yeah, well, I would say in the last 6 months after stablecoin legislation passed in the US, it's been a tsunami of activity. I would say prior to that, there was a lot of innovation teams like experimenting around the edges. Suddenly, with legislation passing, everybody is jumping in and actually building on blockchain rails. The primary sort of use cases today are cross-border money movement with stablecoins. So a lot of remittance companies are jumping on board because it's much easier to move money across borders and not have to rely on correspondent banks. So yeah, it's remittance companies, it's payment processors, it's embedded finance companies, it's merchant processors. Everybody, you name it, everybody is jumping on board.
And so you said those are some of the use cases for today. With the regulation, are you seeing the use cases also evolve at the same sort of speed in terms of what we might see in the future?
Yeah, I would say at the forefront right now is probably cross-border remittances. So P2P consumer remittances, payouts, so marketplace payouts, contractor payouts, and then B2B, so businesses. And then tied into that is things like providing credit on like fronting money, providing credit facilities using stablecoins. That's sort of on the front lines. What you're seeing on sort of the next wave is banks starting to think about tokenized deposits and some of these use cases that are a little bit newer. And a lot of stablecoin issuance. So the stablecoin wars are definitely heating up. Beyond USDC and Tether and PYUSD, you have a lot of financial institutions saying, hey, I'm going to issue my own stablecoin. So just recently, Fiserv announced that they're launching a stablecoin on Solana, Fiserv being a major global payments processor. And similarly, Western Union, same thing, you know, one of the biggest remittance companies in the world, issuing their own stablecoin on Solana, because not only did they see the benefit of this as a payment rail, but they say like we should own the asset as well, right? And we should have control over the asset that is sort of powering all this.
Totally, and also from like a client acquisition and retention perspective, if you're looking at that next generation,
absolutely,
of who might be using it. So thank you so much for spending the time with us today.
Yeah, thank you for having me.
Cheers, thank you.
Thanks.
Welcome back to the broadcast, one and all. You're watching Taking Stock. Man, oh man, this might key up to be what is the coolest interview we've done here on the show. Say hello to a man that I watched play professional football for many years as a diehard fan of the NFL, the one and only Marcus Colston. He is founding partner at Champion Venture Partners. Oh yeah, and a Super Bowl champion. Welcome to the broadcast. Great to have you.
I appreciate you guys having me today.
Yeah, you're definitely the first Super Bowl champion we've had on the show. Not many analysts or people in venture capital have quite the resume that you do. Can you start first and foremost, talk to me about your work with Champion? What are you seeing in the marketplace and some of your top priorities ahead of 2026?
Yeah, absolutely. I mean, Champion was really born out of a way to try to create access to the sports asset class. So as a former player myself who stepped into the financial services world as an advisor, I've been an angel investor for 15 years or so now. So just seeing the gaps through all of those different roles that I've been in kind of gave us the roadmap to launch Champion Fund. And we're really excited about going live, hopefully early 2026.
Was there kind of an aha moment during or after your playing career where you start to kind of position yourself now in the world of venture capital for what life looks like?
I would say there's several aha moments. Obviously, as a player, you are the product. I spent about 7 years as an owner-operator in indoor football, so it gave me an opportunity to see what it looked like to build the product. And then the work as a financial advisor, you just start to see where the gaps are, specifically in the alternative market. So I think those three gaps and those three experiences kind of gave me a really unique synthesis to be able to create something like this.
Yeah, you're a Hofstra legend, you're a New Orleans Saints legend. Talk to me a bit more about sports overall as an asset class, what you uniquely can see in that particular arena, no pun intended, that maybe other people who are also in the world of venture capital or early stage investing, they may also want to consider.
Yeah, I think when you really sit back and think about the conversation around sports asset class right now, it's all big four teams. It's NFL, MLB, NHL, NBA. And the reality is sitting in those different roles that I talked about, we understand the value chain that sits underneath the franchises, and the ability to kind of aggregate all of the value chain into one portfolio is our thesis at Champion Fund.
What do you think ultimately makes up what people call the sports economy? I mean, we hear a lot about these kind of team valuations. We hear about these wild deals through things like Major League Soccer and Lionel Messi down with Inter Miami. I mean, the landscape, I got to imagine, has changed so much even since you were playing for the Saints.
It changes like it changes so fast, and really the biggest catalyst is media. The media consumption, the fan consumption. Sports going from a seasonal entertainment product to a 24/7, 365 entertainment platform. And I think with those changes in the business, you're seeing more tech integration, you're seeing more fan engagement. Through the media rights and just viewership. And what you start to realize is we are creating this value within the platform, but have very few avenues to own in the platform. So Champion Fund, we created it as an interval fund, a 40-act fund that allows both accredited and non-accredited investors to participate, so that you as an athlete, you as a fan or a supporter of the game, even someone that has kids that are in the youth sports ecosystem, instead of it being a one-way street where you're paying into everything, this gives you an opportunity to own some assets within it.
Before I let you go, undoubtedly in your long career in the NFL, you did a lot of post-game jersey swaps with legends on the gridiron. As a VC, as you're situated now, if you had to do a jersey swap with one tech founder, who would it be?
I would say Satya Nadella at Microsoft. I'm just a huge fan of his work on growth mindset. And interestingly enough, I taught as an adjunct professor at University of New Orleans. He was one of my case studies.
Wow, no kidding. Oh, that's awesome. Dude, I could chat with you all show. We got to leave it there. Marcus Colston, Super Bowl champion, all-time receiving leader for the New Orleans Saints. My man, thanks for being here. Really good to have you.
Appreciate you having me.
Folks, don't go anywhere. The New York Stock Exchange's very own Ashley Mastronardi sat down with Secure's Matt Thompson to talk all about the future of digital identity. Take a look.
Secure is an AI platform that helps enterprises combat deepfakes, manage risk with its Risk OS platform, and so much more. Joining me now is Secure's newly minted President and Chief Commercial Officer, Matt Thompson. Nat, welcome to the New York Stock Exchange.
Thank you. So exciting to be here with you.
And I understand it's your first day on the job.
It is, yeah. First day on the job as president at SoCure, but I've been in the identity industry for 15 years. I co-founded a company called ID.me. I led consumer identity at Capital One. I ran a business called Idemia, their identity business for North America. So I'm a veteran in the digital identity space, but been with SoCure the last 4 years, building their government business, then chief revenue officer, and today officially president of the company.
What is the digital identity space?
So that's really how you prove who you are online in order to establish trust with another entity. And that could be another person for, in the gig economy. That could be a bank that you're trying to open a new relationship with, a fintech. Basically anywhere you need to prove your identity online, and anywhere that corresponding entity needs to be able to trust that you are who you claim to be.
And how does SoCure fit into that ecosystem?
Yeah, so we're really central to enabling the trust to happen effectively. So when someone goes to open a bank account, 17 of the top 20 banks in the country use SoCure to make sure that the data that's being input, all the signals related to that transaction are legitimate, are associated with a person, are not fabricated, manipulated, or being, perpetrated by a fraudster or cyber criminal to impersonate you.
And again, congratulations on your new role as President and Chief Commercial Officer. What are some of your immediate and long-term priorities?
Yeah, so right now, our immediate priorities are really being at the center of agentic commerce and making sure that as agents are empowered to do things in the digital economy on your behalf, which is really starting to scale, that we're enabling trust in that ecosystem. Other priorities for us include really maximizing the acquisition we did of a company called Effective AI, which we've now rebranded into RiskOS, and bringing more capabilities faster to our customers to help solve a lot of these evolving threats related to identity fraud and cybercrime. We're also really expanding our footprint into newer markets, both geographies and industries. Today, SoCure is the gold standard for fintech. We're known as the go-to when you need to establish trust with a consumer or business by way of know your customer or know your business. Same thing with large financial institutions, all the traditional financial institutions, and we have a lot of the top 5 banks in the country are also investors, as well as use SoCure for all of their identity transactions. And then government is another big vertical for us, where we support over 100 government agencies today to make sure that people aren't fraudulently filing for unemployment with your information, or there's not Medicare fraud, or we're not sending benefits to dead people. And so SoCure has been really established in these verticals, but we're really making a concerted effort to push more into crypto and into these new AI companies that are powering the future of the internet, and make sure that we're helping broaden and bring best-in-class trust technology into those ecosystems as well.
All right, Matt Thompson, SoCure's President and Chief Commercial Officer, thank you so much for joining us on Taking Stock.
Appreciate you. Thank you.
belt. Welcome back to the show. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. In our continuing coverage of Abu Dhabi finance all week long, fintech contributor Lawrence Wintermeyer sat down with Solomon Tesfaye of Aptos Labs. Take a look.
I'm Lawrence Wintermeyer, and welcome to FinTech TV at Abu Dhabi Finance Week. I am so delighted to be joined by Solomon Tesfaye from Aptos, who's the Chief Business Officer. That's correct. Welcome.
Thanks for having me.
And it's great to meet you in person.
That's right. I feel like it was inevitable at this point how many conversations we've had over the years.
Exactly. So tell us, what are the big things going on at Aptos right now?
So Aptos is right now hyper-focused on three things within global trading engine: money movement, data on chain, and basically when it comes to just capital markets holistically.
Now, when we look at all of the narrative that's going on here at ADFW between crypto and real-world assets, walk us through the 2 or 3 big trends that you're seeing and how they relate to the Aptos infrastructure.
So at this point, look back at all the times I've been to Abu Dhabi, really at this point they're focused on really timelines to actually integrate stablecoins and RWAs and actual specific applications. Historically, it was whether or they're actually going to pursue blockchain in general. Now it's actually more definitive. And so on the RWA side, really they're focused on money market funds and private credit, and then traditionally very liquid assets that they're trying to bring on chain. And on the stablecoin side, it's basically instant settlements attracting everybody, whether it's remittance, microfinance, or cross-border transactions.
Yeah, and you were speaking to some of my colleagues on stage this morning. Of all things, in the institutional space, it seems that tokenized money market funds and collateral eligibility, the use case, while in the retail environment, stablecoins really continue to be the use case and have high utility across every segment. Where are we seeing some of the real world assets in the middle? The US folks are always talking about tokenizing, public securities, and we're waiting for the SEC on that. There's always the promise of private security tokenization, but what's your take on the way that roadmap is evolving?
So stablecoins definitely have the strongest product market fit at this point. So I think you're going to continue to see throughout the next 12 to 18 months, greater applications. I mentioned remittance, microfinance, but also payroll. And other B2B transactions are going to be brought on chain. On the RWA side specifically, which has been growing at a rapid clip, aside from money market funds and private credit, you're seeing people really focus on just traditionally liquid assets as opposed to necessarily only focusing on private assets. They realize that building liquidity for these private assets is going to take a lot of time. And so right now they're just trying to create that connectivity between whether it be the public markets, the commodities markets, basically very liquid markets, and on-chain activity.
Solomon Tesfaye, what an absolute pleasure to catch up with you today. Thank you for joining us here at FinTech TV.
The pleasure's all mine. Thanks for having me.
Welcome back, and now in our continued coverage of Abu Dhabi Finance Week, FinTech's very own Patricia Wu sat down with James Zhang of Sharps Technology, one of our favorite guests here on the show. Take a look.
I'm here with James Zhang, Strategic Advisor for Sharps Technology. Thanks so much for stopping by.
Thanks for having me. It's exciting out here.
It sure is. Now, since we are in Abu Dhabi, let's just kick off with developments you're seeing in the digital asset space in the Middle East.
Honestly, I think Middle East probably plays one of the most pivotal roles. As you know, Middle East, Asia, and the US, even though the NASDAQ is located in the US, there's capital markets all around the world and pockets of capital. I think, honestly, regulations have gone a lot better. If you look at some of the companies out here, Rockaway X, Soulmate, one of the largest sponsors, they just got acquired, and the DATs are honestly really driving out here.
Speaking of DATs, we've seen market sentiment shift a little bit the past few months. So, how are digital asset treasuries positioned now in this new environment?
Most definitely. I think in the DAT 1.0 world that everyone's seen, starting with strategy and going on to a lot of other DATs, is increasing your NAV per share, selling stock, increasing your assets. So I think in the DAT 2.0 world that we're moving towards, it's really how active a manager can be and how much revenue you're going to generate. And that's going to be reflected shortly when earnings reports are coming out, and you can really see what DATs have been doing beyond just the regular staking and the regular passive flows. Otherwise, it would be like an ETF, and now utilizing the financial tools that DATs have.
Speaking of financial tools, which ones can DATs use when we see the market turn a little bearish to instill some more confidence?
Most definitely. As you see, the price has dropped in the last few months. The sentiment has not been as bullish, but honestly, that plays right into the treasury strategy of a lot of these DATs that I think a lot of investors are seeing, where number one, you can sell potentially asset per share and instill shareholder confidence, right? If your MNAV is, say, half, 0.5x, to 1, every stock that you buy back, that you sell your asset, is like doubling accretion for your investors, which at the end of the day, you have a duty to your shareholders to increase your NAV per share and your stock price. So I think there really is a lot of tools that DATs can use in fundraising and leveraging public markets, and then going into the interesting parts of why DATs are set up to leverage DeFi protocols, and especially in the Solana DeFi ecosystem.
Speaking of interesting, so much going on here this week. What are you going to be most focused on?
Honestly, one of the main events I look forward to every year is Breakpoint, where there's the most product releases you'll see with every protocol in the Solana ecosystem, including ourselves. So I'm super excited for the next few days of Breakpoint. Abu Dhabi Finance Week has been an amazing meeting, a lot of family offices and the large folks over here, because when you don't get to see each other in person, things you don't get communicated as well. So I think a lot of product developments and the regulators here are great.
All right, well, thanks so much.
Thank you so much for having me.
Oh boy. All right, let's do it, folks. Welcome back to the broadcast. With our remaining moments or so, we'll get you quickly caught up on what to expect here on Wall Street tomorrow. Very light on the earnings front, but tomorrow on the show, we'll try and give you a wrap up on a few big earnings calls that wrapped up today after the bell. That includes a few names we've been talking about throughout the week, like Broadcom, Lululemon, as well as Costco. We also get the unlocking of the Fed speakers now that we've had the interest rate decision earlier this week, and that includes in the 10 a.m. hour, Austin Goolsbee of Chicago. Remember, Mr. Goolsbee was one of the dissenters, but for a bit more hawkish reasons than some of the doves. We'll hear it to say what he has to say about what he saw in the data to be a bit more hawkish than some of his colleagues. All-time highs for the S&P 500, the Dow, the New York Stock Exchange Composite Index, and the small caps here on Wall Street. That's going to do it for today's edition of Taking Stock. Have a fantastic Thursday night, and we will see you again tomorrow. Woo!